Hello and welcome to today's episode of our podcast. I am Ronit and with me is Dhruval. We are from the Finance Club of NMIMS Indore, and today's episode is a must listen for anyone who is navigating a career in the field of finance. Today, we have an incredible opportunity to interact with someone who is a true expert in the field of investment banking. Joining us is Mr. Vivek Suman, who is a CFA chartered holder with an experience of over 20 years. He brings a wealth of expertise in the investment banking, merger and acquisitions, and corporate finance as the managing partner at M&A Experts Advisory.
He is a committee member at Acute Rating Limited, India, for reviewing and approving ESG ratings. Throughout his career, he has led more than 10 high-impact deals with a combined value of $200 million, including cross-border transactions across USA, Canada, and Oman. His work has secured $100 million in funding, particularly for the startup meeting and energy sectors. Sir, it's an immense pleasure to have you here, and we invite you for this podcast. So let's have this podcast.
Pleasure is mine. Thank you very much for welcoming here.
So we all would like to know how has your journey been after completing your MBA from Midsom in marketing and HR, and how did it incline towards the investment banking?
Oh, where to start? Well, completing MBA is just like a toolkit, isn't it? Where you don't know what you want to build, a skyscraper or a rocket ship. The best part was that I was doing a lot of trial and error, and with my friends, I decided to pursue a program which I eventually came to know that I was not capable of handling it to that scale. I delved into marketing and HR thinking that I would be Don Draper, meeting Oprah, the characters of ABC network. Now, but the fate would have it, those marketing stuff, business plans has been replaced with the business plans with financial model, and the balance sheet swamped the marketing plans for me. Before I knew it, I had, I felt like finance is my core and I can enhance it. And that is why it was more connecting dots happening over a period of time of 3 years. And I decided that I can only do is business modeling, financial modeling, and creating balance sheet. And that's how I ended up, or you can say I mixed the cola with a soda. That's how it worked. With the fetch.
So we have also known that you have been working in Oman from past 20 years, and you have recently shifted in 4 to 5 years in India. So how do you see the difference of the landscape in Oman and India?
So you see, both country has a different kind of pedigree. However, the business remains same. Anywhere you go, business has the same language. It doesn't differ. Specifically when you are working in financial industry, the numbers never lie, right? It cannot say anything else than what it is meant for. So there is a similarity, but a stark difference in the culture. So when I was in Middle East, of course, it is a kind of developed market, infrastructure is very strong, business acumen is very high, those countries follow IFRS, India follows Indian AS. So little bit, of course, I need to do learning as well, because when I came back in India, I was working as a CFO, so I need to know Indian AS. Of course, I wanted to do a little bit tax as well, but of course, it was challenging given that I was working in Middle East, and IFRS scenario with IFRS 3 is my core, where we used to do merger acquisition. All the business combination happens under IFRS 3. So that is the difference. But business, as I told you, speaks the same language, and I never felt an inch of doubt when I was delivering value to our customer, and that's what is making my day every day nowadays.
Okay, so our next question is you wrote a book on Underdog to unicorns. Right. So can you give a glimpse of how that book aligns with the realities of entrepreneurship as well as growth?
So basically that book is my experiences with large companies, who became large starting very small. So startups who has gone large, that's the story from Underdog to unicorn. Of course, I have first chapter, if you will read, it talks about myself as well, because I was also in the same pedigree. I was in 10th, I scored second division. In 12th, I graduated with first division number. But in engineering, I topped the university. I was a rank holder in university in engineering. Then in MBA in MIT as well, I ranked in top 3. So that's the journey on education side, and when you see my journey in working side, similar story. So earlier I was very lethargic, I didn't want to work, and as you know, I didn't have the passion as well about that industry. So that was the impediment. But slowly, once I got in grip of financials and financial modeling, business plan, merger acquisition, investment banking, today I'm working with large companies. I'm working with big names and trying to help them to transform themselves. So that journey, if you see the book, specifically that book starts with the story, but actually it goes into hardcore discussions of investment banking. So each of the module, if you will see, it's like a short course with the practical examples, Airbnb, we have talked about Uber, that how they have done the valuation, what kind of pitch deck they have prepared, what kind of placement they have done, how they became a unicorn. That journey I have mapped it from chapter to chapter with a learning modules as well. So you will see there are some financial module, what you need to consider when you are talking about valuation, what is the requirement, little practical side of it, that how in industry it works. So for a startup valuation, etc. Such kind of detailings are there in that book.
So could you walk us through the typical M&A process from start to finish? Specifically, how do you approach the stages such as deal sourcing, valuation, due diligence, and integration? It would be helpful as a student to know.
Perfect. That's a good question to ask.
Like for a 9 student who want to make a finance in IB.
Right.
So how does the M&A process starts, and how does the deal starts to the deal end closure? Small brief about that.
So very good question. That's what this question has. It will benefit a lot of people who is watching today, and I can understand the value of it. It's very simple process if you ask, but the devil lies in the detail. Okay, so let me give you the 30,000 bird eye view that how the industry works, and then let's see that how much you want to understand there. So any deal sourcing starts with a database. Yeah. Two type of database. One type is where I need to connect with companies who wants to acquire a company, or I need to connect with a private equity player who wants to invest in certain industry, certain company. I need to find them. So these comes from different sources. For example, networking event, there is a centralized data source. All these terminals which are available, even Bloomberg terminals, FactSet, all these guys you need to observe. You need to create your own screener based on your choice of the industry, whom you want to work with. And I can find a target for him. So that's a target sourcing start. So you do that filtering process, you find the right company for them. You go, even though you have not found, you go and meet them, try to convince him that they should give you the mandate to find such kind of target for them. Yeah, based on their progress. For example, we were trying to help one of my friend in Britannia. He was trying to acquire a company in particular size and shape. So I convinced him that your company has a lot of cash in your balance sheet. Why don't you think about inorganic growth? Now, inorganic growth means that he has to find another company and invest with it. To acquire, right? That's the inorganic growth for any company. That person said, okay, come to my office, discuss with my team, and we went there and they have given us that mandate. Yeah. Then what we did is we started looking by filtering on these databases, which will suit their deal size. So every company has its own deal size fixed. So I want to invest $1 million. I might have $10 million, but I want to invest only $1 million. This is the industry. They will also tell you which industry they want to target. And they will tell you that what kind of EBITDA level on broader scale they want. Once that is they have given you, you need to go into market, source that company through different sources, including databases, including your networks, your own network, your previous clients. It can be anyone. Or you can go to the screener.com and find out a specific that kind of company. Once you get that database, you need to connect with those companies, convince them that look, there is somebody who is looking for a company like you. Are you interested to sell? A lot of people take it on prestige. They will never sell. Yeah, but some of them might be interested. So that's the deal sourcing done. Second stage is, of course, once person has agreed with you that they want to do, this is the company, these are the 10 companies where we want to invest, then it becomes an investment banker responsibility to conduct a due diligence. On behalf of the buyer, you need to do it. Yeah. So in that case, you have to put a very good China wall that you are no longer associated with the company which you have called them for acquisition. Okay. And then you do the due diligence on that company. There are different type of due diligences. We will discuss that. And then once due diligence is finished, valuation is also, you have to create a valuation model. You need to supply to the acquirer. If acquirer agrees and sees a value, and along with synergy value, a lot of people miss that part. Okay, synergy value, a lot of people misses. So if they capture that and they see there is a synergy possible as well, post integration will be smooth. All these need to be checked beforehand, and that's why investment banker plays a critical role here. Now, if you are joining as a fresher or new kid on a block, you might not get whole spectrum, but part of that definitely will come. For example, only interacting with all the targets. You might be doing it day in and day out. Once you get expertise, you get the relationship done, then you may be graduated to look into due diligences as well. Once you have got experience in doing due diligences, then you might give an exposure to valuation as well. And then you can go, or in a smaller boutique firm like us, we give all the work to all the people. Why? Because we have less resources, and secondly, the client spectrum is also lower. So that's the second part. Third part is once due diligence is finished, then you let client come for negotiation. You can help them in negotiation. Creating deal structure becomes a critical part here. Again, this is the responsibility of investment banker to create that deal structure which suits the acquirer requirements. Yeah, because it should match their requirement. Is it a debt equity deal? It is a LBO deal. All that you need to help the buyer to have done. A lot of time buyer have its own team. So the deal structuring maybe the internal team is doing or third party is doing. KPMG is doing deal structuring. They will bring on table. Your responsibility as an investment banker will be to negotiate on the client behalf with the acquirer or target. And once that is done, of course, there is a post-integration which happens. You have to make sure that whatever commitments were made, milestones are made, are matched, and you work with a client like a client right hand. So this is the whole process. It's a long process, but interesting one.
So next question is that as per now scenario, in which industry do you foresee more M&As in the upcoming decade? Like, is it an energy sector or a pharma sector, or which sector? As the world is moving towards ESG, so which sector do you foresee more M&As?
So there are 5 sectors which are my favorite, and right now they are kind of leading the way. The first is energy transition. Not only energy transition is the sector which is in huge limelight. Yeah, and the reason is all company wants to get transformed themselves, being a fossil fuel guzzler to a more agronomic sustainable company. So energy transition has a huge scope. Everybody is doing it, and there is a big market there. Second is healthcare. That's another favorite area, and this is not new. It's last 5 years it is very aggressive. Right now it's been seen for last 2 years with large acquisition happening by Manipal, by Astra, etc. So those deals have created the buzz. Third, which I believe, is real estate. Now real estate, a lot of people get wary about, but money is there in real estate, and there are a lot of good opportunity which are coming up now. So in facility management, in introduction of technology in real estate operations, platforms, because there is a huge a chunk in form of InvIT. If you have heard about it, it's REIT and InvIT.
Investment trusts.
Absolutely, that's the one. Real estate, for that you create InvITs and REIT. Because of lot of money has come to those guys, of course money comes for a purpose, you cannot keep it. But once you are running it successfully over a period of time, then you need to diversify. And in that case, those guys goes back to the real estate once more. So that's another area. Apart from that, AI ML is going to be limelight for quite some time right now. And a lot of people are doing merger acquisition as well as starting new companies in that area. So these are 4 to be a specific important industry which I see.
Even I would like to add that now China's economy is a very sluggish. So even in healthcare sector, I have seen that various CRDO or CRO firms are not shifting to India. So even I agree that India has a good growth in the healthcare sector in the upcoming decade.
True. And reason is, Aniket, reason is also because of your gap between per capita doctor's availability and the hospital bed's availability is still lowest in the world. It's not world, at least the developed world we are talking here, right? And that gap need to be filled. And that requires a lot of merger acquisition, expansion, which is happening currently in the market.
Sir, the next question is, as per one of the Harvard Business Review articles, we saw that nearly 70 to 90% of M&A deals fail. So what according to you could be the reason for the same?
Yes, that's the classic question, yeah. Why do M&A fails question? Honestly, it's like baking a cake which you can have all the ingredient, but you mess it up, right? If you do not do in proportion, in right timing, all that is very important. It will flop if you don't mix it rightly, right? So that's how any M&A deal is. If it is undercooked, then also it's gone. If it is overcooked, then also it's gone. So usually it is a mix of poor synergy. I identified these three areas. Of course, this is a fact. When sometime in some cases we have seen up to 94% company fails in certain industry. Okay, so out of 100 company, 94 merger acquisition fails. But nobody advertise. Once you have acquired a company, do you go and say, no, I am making huge losses because of this company? But people know it. So first is the poor synergy, which has not been visualized before, and that's why I'm saying investment banker role become critical, because it's a third party whom you are relying to.
Yes.
Second is overhyped valuation. Because of the market condition, generally people tend to overprice their stuff when they are selling to somebody, or you are trying to acquire me, I will increase my price, right? That's a normal human tendency. And third is unrealistic expectation which you set. Okay, so when you set the clauses, you try to put over optimistic deadlines, over optimistic acquisition targets, after merger what will happen, all that kind of discussion. And last but not least is post integration. Don't forget that post integration issues are generally silent killers. And I have seen the devil lies there actually, not in the way. Cultural differences, management not agreeing with other management, somebody has a mentality not to work with another team. Actually, it is a cultural difference which kills the whole process. And that is why you will see nowadays people are very wary about culture. Yeah, if they are trying to acquire, merge, they make sure that that is taken care of, be it Blinkit to Zomato, all of those. So need to be seen there.
So next question is that hostile takeovers are seen as aggressive moves in the corporate M&A world. So firstly, how are they different from normal friendly M&As, and how do target companies defend themselves from the hostile takeovers? Recently, 2 or 3 years ago, L&T Infotech acquired Mindtree. Right. Or any other example you would like to share with us? Or
so this one I quote again with the cake, anecdote, that it is like you are going to somebody else's party, yes, and claiming the cake, saying that this is my birthday cake. This is exactly the scenario when hostile takeover happens. So a lot of frowns will be there, uninvited you will feel, because you are doing the hostile takeover, right? So point here is, in a friendly M&A, everybody shakes the hand, they will laugh, they will sign whatever paper you will ask from. But whenever we are talking about hostile takeover, we are not understanding the scenario, and that's why you must have heard either hostile takeovers are accretive, so it will add a lot of stuff and you will expand it, or it is dilutive. You won't believe, majority of time it is dilutive. If I am trying to acquire your company, I'll make sure you go down the drain if you are not getting acquired by me. Okay. So dilutive is the major problem. However, there are different methods You must have heard about poison pill or nights you can put. The famous story, if you want to know, go back in history when Ambanis were trying to acquire L&T. Forget about L&T Infotech. Ambani wanted to acquire L&T. What L&T did is he went to straight to Birlas at that point in time and saved themselves. AM Naik I'm talking about here, okay? So those kind of stuff you need to see. So that time he's bringing a third party to outbid the hostile takeover. So these are a few examples, and this hostile deals need to swing in right direction, otherwise it ends with the company who is defending themselves. They should be careful, okay? Don't go with your impulses, otherwise you will lose your company completely.
So the next question is, how do you see the market conditions such as interest rates or credit availability affect the feasibility and success of leverage buyouts? What trends do you see in the leverage buyouts market today, and do you expect use of leverage buyout to increase or decrease in the near future, since we all know that recently US has cut the Fed rates of 250 BPS. So how do you see this? 500 BPS, sorry. So how do you see this?
So interest rates are like gas pedal, right? Specifically for LBO. Please note that. The reason is the lower rates means cheaper debt. As simple as that, which makes LBO more attractive. Anybody who wants to take over, it makes them very attractive. Why? Because you have a cheaper debt which you have available, which you can go and deploy on somebody else's acquisition, right? And the whole thing revolves around money, and when rate rises, you need to be careful. Right now, rate is going down, at least in US, which is a good news, but Japan didn't budge. So 50 basis point, which they have reduced 500 basis point or 50 BPS. That has nothing to do with that. It is then in that case, it is like if you know Hummer or Thar, right? So it's a Thar which you are driving on an uphill. You put a lot of gas to go up, but at what cost? At the cost of petrol which you are using it. Right? Similarly, when interest rate is lower, people tend to jump here, and there will be increase in activity definitely, and I see a spike in activity and very soon. India will definitely reduce because our currency is also going to appreciate. So we are going to reduce our interest rate, possibly not this quarter, but definitely coming quarter. And the LBO market is like weather map. Everybody watches the condition, okay? So it's everything is linked to the price and interest rate and inflation. So be noticeable about that.
So in your opinion, how is government promoting ESG, like say in India or as well as in US or Oman? And what could companies do to integrate ESG more deeply into their operations?
So governments are definitely turning up the volume of ESG now, okay? All governments across world. I was just citing to you guys about European CBAM, right? CBAM has come, which will stop the import. Who is doing with lot of, lot of carbon emission? Those company exports to European nation will be stopped. So all governments are active in this area. They have brought in a lot of regulation as well as incentives. So do see the other part as well. For example, India has just launched Pradhan Mantri EV scheme, if you are aware about it. So they will give you 15% straight away discount. Then the state government also gives you if you buy a battery driven car. So there is a state government discount, there is a central government discount, and then there is a companies which set up their farm, they also gets incentive from the government, okay, on their manufacturing. So all those adds as an incentive, and then there is a regulation on the other side. For example, in US you have SEC, which has recently launched. Under EPA they have already regulations in place for environmental protection. In Europe, I told you CABM is there, then CSRD is there, then CSDDD is there. By the way, Europe, specifically on regulation and incentive, are much ahead of anybody else. This time Europe is winning a green war, compared to US and India. India has also picked up. India has developed its own BRSR scheme, and it is no longer a checkbox exercise. Okay, They have improvised, like your professor was talking about NGRVC, right? The National Guideline for Regulation. The 9th principle has been set in 2009, 2011 it was introduced, 2012 people have made it mandatory under CSR. That time it was named as a CSR, but those 9 principles were there. People were reporting for 12 years and they made a lot of mistakes. That's why in 2021, government increased the volume and said that no more hanky-panky will be allowed. All 1,000 companies which are complied to BRSR has to answer clearly these 98 questions which are compulsory, and then there are 42 questions which are optional. So there are 140 questions which they ask you and you have to respond quantitatively and qualitatively both. So very interesting stuff. Looking forward to it.
So also at NMIMS, we are encouraged to do CSR activities, and in our MBA program, it was inculcated by going and doing a CSR internship for 21 days. It was a very compulsory internship for all of us, and we also have a subject here as a corporate social responsibility, which was added to our course in MBA. So yes, sir.
No, that's very interesting stuff, Miss. I was hearing even you got an award. Your college got an award, most innovative course award. That's a very good stuff, and I'm really impressed that colleges like your institutions like yours are promoting this field. That's what we need currently. Our youth need to pick up the sustainability much faster than the professionals.
So how to make a career in investment banking, and what are the key skills which a student must have in order to tap into the investment banking field? This is the most asked question, and
it's $1 million question. Let me ask you that $1 million on table, and then we go and discuss.
It's like that many people want to enter into this industry, but only a few are able to get into this industry, and only out of those, only few get those roles. So like, what's the flow of that?
See, 3 things which I always emphasize people should have, specifically in the field of investment banking before they come and join. This is, I would say, first thing is adaptability. You need to be adaptive to the environment where you are going. Because investment banking environment, anybody can claim, create simulation. Trust me, you will never feel it. Till the time you are there on the shop floor and working with us. Okay, it's as simple as that. Investment banking is a grueling exercise, and the reason is client is over demanding. Here we are talking about $1 billion deal where there will be percentage of that deal will come to consulting firm. Just imagine $1 billion, 1%. Just imagine one number, right? How much that number would be? A huge number, right? We are talking about 100 millions. If it is we are talking about 10 billion as a total number, 100 million will come to a firm. Just imagine 100 million is coming as a fees, and that too for due diligence they will give you 15 days. And due diligence requires some massive work where you have to see forensic, historical, you have to see what it looks like currently that company, and also how it will look like in future. Yeah. So first skill is adaptability. Second, be little more open towards the techniques and recent deals which are happening. Yeah, learn more about them. What is happening in the market? Because anybody who wants to come and sit with you, he wants to know whether you understand the technicality of those deals. Yeah, and this will come only by reading Economic Times, reading newspapers, reading Financial Times, what is happening there, or going to your terminal. You guys are blessed, you have a Bloomberg terminal. Go and watch, just put a filter there and you will get every time a notification that this deal has been cracked. Just read the nitty-gritty of that deal. Try to understand. Of course, you need not to be expert. There are seniors who will be expert. But you need to see which portion I can contribute with it and how. This will be definitely helpful if you want to do. And third skill, let me not leave that as well. So adaptability, technical side, which you need to learn on regular basis by capturing the data. And third and most important is that be ready to burn your midnight oil. Okay, because there will be days where you will be working 24/7. Yeah, like just now, Goan government has hired BCG company, okay, to do their 2040 vision. Like India has 2030 vision, 2040 vision, right? India has created its own 2047 vision, the 50 years of India, 100 years of India. Similar, Goa government wanted to do. So they hired BCG. Of course, they didn't hire an investment banker. They hired a BCG so they can develop several programs on PPP basis, what they should do. And that project failed. You won't believe it failed because a few members of that BCG company were not able to deliver to the scale where Goa government was expecting. Yeah, they worked for 6 to 7 months and the contract was cancelled. And again, a multi-million-dollar contract for BCG they have lost. So it might not be the junior who has messed it up or could not create a value, but timing is also important, because Goa government came in newspaper and said that because of they were taking too much time, and BCG being a professional company, we are cancelling the contract. So this happens, and this happens in the market. So be ready to burn midnight oil with your seniors, try to bring quality in your discussions, and eventually that will come from technical aspect of the investment banking and adaptability. If you are adaptable, you will succeed.
It's been a very we are firstly very thankful for this opportunity to have your podcast at NMIMS Indore. So we from the Club of the Finance Club of NMIMS Indore, we thank you for this opportunity. We got to know about the potential M&As, LBOs, M&A deals, and the upcoming M&A future, like in which sectors are going to M&A. I think this will also bring a great insight for the students who want to who want to make a finance in in M&A.
Absolutely. Also, sir, your insights on ESG and corporate finance and M&A will definitely help us. Thank you once again for joining us, and to all our listeners, stay tuned for more insightful discussion. Until next time, take care and keep learning.
Thank you very much. I appreciate it. See you soon. Bye-bye.